All right, you guys see that? What?
Yeah.
Well, you're familiar with this screen, so all right. So candlestick charts. Candlesticks have been around for a very long time, as in since the 18th century. And so they were used in rice trading. I don't know exactly how they were used, but I thought that was
Yeah, that's crazy. I didn't know that.
I didn't know. But in the early 90s, this guy, Steve Neeson, he wrote this book, Japanese Candlestick Charting Techniques. And I actually have that book. It's pretty good. And it gives, there are so many candlestick patterns though. And I've just synthesized it down to like a handful, maybe a little more, of what is the most useful. But there's just so many out there. If you wanted to look into them, you can buy this book or look up Wikipedia. Okay, so the benefits for using candlesticks, as we've talked about, it's an easy identification of the open, close, high and low price of a stock. And it's also really, they're really good in identifying reversals and extensions of price actions, and specifically for swing trading, as in within a few days, like what Andy did with Bros, and also within a trading range or price channel. And the other upside to using them is a majority of traders use candlesticks in their analysis. And so we really do want to follow along with the masses and not be on the outside of the analysis to make good decisions on what the price is going to do, or the probability of what the price will do. So this is, we've talked about this before, but this is a bullish candlestick. And this is the highest high of that day and the lowest low of that day. These are called wicks. This is the close price for a bullish candle. This is the body, and this is the open price. And then we have over here, this is the open price for a bearish or negative price change, where the price goes down that day. And this is the close price. Now this is a cheat sheet, and I recommend that you guys print this slide off and have this available at all times to reference when you're doing your analysis. I highlighted or circled the ones that I'll be talking about today, and these are the most valuable in my opinion. So we've got bullish, piercing line, morning star, hammer, dragonfly, doji. Those are all when the stock is in an upward trend. Then we've got bearish, engulfing, dark cloud cover, evening star, hanging man, and gravestone, doji. And those are all when the price is going down. So these are the definitions. This is another thing that you may want to have handy. I'm not going to read these to you, but what we'll do is I have examples of each one of these, and I will go through them.
I love the names. Like, I'm wondering who comes up with this stuff. The graveyard.
I know. Graveyard doji, right?
Yeah. That's definitely
Pretty interesting.
And hanging man is not.
Hanging
man. Right. These are self-explanatory. We know what's bad here.
Yeah, I know, right?
Yeah.
So I just try to look at the images and not focus on the names. Okay, so here's an example of a bullish engulfing pattern. And we have seen these before. I don't know that you've actually, well, you haven't noted them, but this is where this big green candle engulfs the prior day's red candle. Like a really good sign that this is going to go up. And this is one of the ones that I like the most. I think it's the most predictable for what the price will do, or the stock will do. And again, I like to use these within a channel because these are not for like looking far out into the future, but within a shorter time frame, which you're going to get within the channel. Like with a script, it's a 21-day, or if you draw them, that's another thing, whatever, but use it within a shorter time frame. And they're pretty nice, pretty predictable. This is a piercing pattern, which is where this candle here, the big green candle, is about a third of the way up. I mean, not a third. It has about a third left, about 2/3 coverage of the prior day's red candle or bearish candle. This is another bullish indicator that it will go up. This is also fairly predictable. This is the hammer. You will see the hammer at the end of a downward trend. And so what this is saying is that this is the low here for that day. This is the high. And what this is saying, it closed right here. It's saying, okay, the bulls, those that are buying are winning. And so they really push the price up to this point. And if you see something like this, in all likelihood, very likely, especially if it's a really long wick, and you got this little guy here, it's going to go up the next day. It's another thing to watch for.
This one, I think I've seen.
This one?
Or maybe it's, yeah, the hammer and its counterpart, but they're a little easier to spot. I think they stand out easier.
Yeah, the hammer
and quite as much analysis.
No, and our favorite, the hanging man.
Yes, right.
Which is at the, we'll see this one too. This
Yeah.
kind of looks like, but okay, here's your dragonfly doji. The reason it's called I don't know why it's called the dragonfly doji, but the dragonfly doji is at the bottom of the end of a downward trend. And so you'll see dojis throughout. You don't really see them here. Maybe that's a doji, but, or there's a doji right there. But this guy is usually an indicator. If you see a doji down here at the bottom of a long downward trend, in all likelihood, you can at least watch it very closely for it to start to go back up.
And the dojis, when they open and close at the basically.
Approximately, yeah. It's called, they're considered indecisive or indecision candlesticks, you know, where you have the seller and the buyer at kind of at an impasse. It's like, so it's the open close is the same right here.
Yep.
But if it's down here, this kind of gives you the idea, okay, a decision has been made. Especially you see how big these red candles are. It's pretty aggressive on the downward trend. So in all likelihood, and it did in this case, not, you know, and some of these don't work out, but it's good to identify them and to watch them closely. Okay, so this is the morning star. And so what this is that you'll see, you know, have a little downward trend here, and then the body here of this candle, and then the next day a big green candle. In all likelihood, this thing is going to start moving back up. What you want to see too is you want to see somewhat of a gap between the close of the prior day and the open of the day after. And that is the identifier for this being a morning star. So now we're on to bearish patterns. Okay, so this is bearish engulfing. And so what you have here is you have a red candle encompassing the body of the day before. It doesn't, I don't think I was clear on that on the bullish, but it doesn't have to engulf the entire span here of the wick. It's just the body of the prior day. And this is also a really good one. The bearish and the bullish, I think, are my favorite of all of these. Here's the dark cloud. So you got it, it kind of came up, it's like about a third above the close of the prior day. And this is a good predictor of it coming back down. And you can also see, I mean, see how high this was. It closed here. And then it opened up here, but it closed here. So it really, there isn't any encompassing here. This is the hanging man. Okay, so you have a really strong upward trend here with these candles. And then you've got this guy, long wick, and then you've got the upper body here. Really good indication of this coming back down, which it did. And it closed down here the next day. And here we have the graveyard doji. And this one was really good at saying, uh-oh, this is bad, because you had a big gap right here. But this is after, you know, we did some down, we came back up a little bit, but it's like, no, it closed here instead of up here. Next day it was red. The high probability is going to continue to fall, which it did. And also, this is also could be a bearish engulfing. You can see that the red covered the body. This could be both. And this is the evening star. So again, same principle as the morning star in terms of the middle candle. The body is typically, you know, needs to be there. There shouldn't be any overlap between the two candles on either side of it, and there is not. So you can see that it closed here, so it just kept coming down. Even though it was up here, it closed right here. I'm sorry, right there. And that is the end of my presentation. So go ahead.
I was just gonna say, I mean, the advantage to these is if you can really study them and find these sort of patterns, it really can be predictive in trend changes.
Absolutely. And that's the whole idea behind these. These patterns will give you a sense of reversals or continuations. And like I said before, you really want to use the channel when you're looking for these patterns. You know, whether you draw your own channel or use the script, combining these two, I mean, call them indicators, are the best way to give you an idea of where the highest probability of where your stock may go. Okay, so these are not to be used for long-term projections. These are shorter term, within a trading range kind of thing. And they work out nicely if you use them for that.
So yeah, so they're part of kind of the whole package that we have where you're using all of these different technical analysis.
That's right. This is just another one that you want to fold in.
Yep. Help you find which day you want to be buying in on your next purchase.
Well, exactly. I mean, we could, what we could do is we could look at some stocks if you wanted to, and then look at some of the candle patterns and see if we can identify any that we just talked about. In fact, I can see one right now with Bros. Let me show that.
Does anybody else have some tickers? I know SoFi was in the chat. Does anybody else have any tickers that they want to look at tonight? There's a couple I have written down here.
Why do I have this over there?
Talk about Wix.
Is it Wix? W-I-C-K?
No, sorry, the Wix to the candle.
Oh, sorry.
Oh, what about the wick?
Yeah, it's perplexing to me, and I just need to hear what that means again.
Oh, okay, sure, no problem. So the wick is really, let me go back to the presentation. You guys see the presentation?
Yep.
Okay. Okay, so the wick, all it is, I mean, let's say that it's like a candle, right? This is literally like a candle.
Yeah.
And so you're burning the candle at both ends kind of thing. And so you've got a wick up here, a wick down here. I mean, the wick goes all the way through essentially, but this is the body of the candle. And this is just where the highest price for the day, or the highest of the stock for the day, is right here. And down here, it's the low price. Sometimes they don't even have a wick. Sometimes you have like the price, the low price and the close price are the exact same. And so then you would have no wick and you just have like a box. And sometimes you'll see that. Maybe we can find some examples of that. But all it is just identifying what was the high for the day for this stock, what was the low for the day. And so you go down here, that's the low price. Up here, that's high price. This right here is the close price. And this is the open price. And if you just have this with you and just keep referring to it, it'll become hopefully pretty clear what this means. This will always, the high price for a bearish candle and a bullish candle will always be at the top here. You'll always have the high price up here and the low price down here.
Yeah, some of the chart that your presentation, they had huge wicks. So I'm like, wow. So they must have just
They did.
fell, or that's the one that caught my eye. So yeah.
Yeah, let's yeah, some of them are just enormous, like this, right?
I think it was, yeah, that. And then on your last slide, I think it was just nothing but wicks.
Yeah.
Yeah, that, yeah.
Oh, this, yeah, like right here.
And the big bar next to it is just
This one.
yeah.
So this is all this is that this is the low for that day. This is the high right here. And so right in here is where this is the body of the candle. So the price at one point was down here and it moved right up here. And then at one point it was here and it moved right here. And so this is when it opened right here. This is when it closed. And the only reason I know that with certainty is because this is a red candle. And so when you see a red candle, always the bottom of the bar will be when it closed. It's always going to be on the downside. Like here, this is where it closed because, I mean, mine is a green outline or a white candle, but it means that, you know, this is a positive day. And so here you can barely see the wick, really tiny. So the open for this was almost the same as the low. So it could have opened, sometimes you see that when the market opens, the price will open at the lowest for that day and then just continue to rip up. And so here's another case right here. It opened way down here, but it closed way up here. It did get up to here, but it ended up closing right here. So really, still a really good day.
Very good. Thank you.
Okay, sure. Any other questions about that? About any of it?